There's 3 specific signs I'm going to give you in this video. This is one of them. Okay, folks, we have a lot to go over, so we're going to jump right into it. First and foremost, tonight's going to be a little different. You notice there's going to be at least 5 ideas, but we're going to talk macroly about what's going on and what to expect in the next couple days. Now, if you look at this level right in here, you can see it very clean, right? This 102.47. See how I have that level drawn? Seeing how you're bonking, right? Support, support, resistance, support, flips to resistance. Look where we're at now. And look at where we closed. Remember, wicks are price rejection. What does that mean? It means up here we just had sellers. So what do we do here and what do we have to focus on? Well, let's drill down into this for a moment and let's just look at this level that I just drew. And let's look at how we responded to that level during the day. Here's a gravestone, right, which signifies a top. So you can see we've completely respected that level, and that's important to understand. Now, this is not setting up for you to look at getting involved on the long side anymore. You've completely rejected this level. Now this long wick, you're just going to have sellers in here. So if anything, you'd be looking at a short-term short position if it breaks 976.77 is what I use. You can use 975 to make it simple, but it would be nothing for this to come back and test this 900. And there's some telling signs that that might happen, and we might as well get into that now. So to start with, Qs today, it's important. We have no leadership whatsoever in the Qs. Nothing is leading anymore. And we're going to talk about that in greater detail. See this 357.09? Got right to it. Rejection. Wick rejection. Closed at the low of the day. The goal now is to hopefully hold the 50-day and then build and go higher. But there's some signs that that might not be the case. So right now, this is not an ideal spot to be putting on new positions. If anything, this is telling us that this short-term rally may have to go sideways for a little bit before grinding higher. So we could backfill in a couple spots here. You could see some backfilling. Now, this is important to remember, and you might want to watch this a couple times, but I want to give you one sign that you could look at that would tell you what we're about to go through. There's 3 specific signs I'm going to give you in this video. This is one of them. And you're probably going to want to remember this for later, not just today. But see these levels right here, and you can see how we broke clear over this. And this is the level I gave yesterday in the top 5 video and stated that if you get above this, you might want to consider going long. Played out actually perfectly today if you take a look at it. You were literally within 50 cents of that level. So great trade on the day. Why is this concerning? Well, it's concerning for a couple reasons. Here's November 22nd. Here's January 7th. Here's March 23rd. Now, what do these all have in common? Spikes. How does that fit into the relation with the NASDAQ? November 22nd, January 7th, March 23rd. How does this all fit together? Well, what's happening is, in regards to GME, they are short covering. Why are they short covering? They're short covering because they feel that there's better opportunities to short in other names. So institutions are closing out their puts or their short positions and then going to the NASDAQ and looking for other ideas. That's what's happening, and this has telegraphed moves down on more than one occasion in the past 6 months. So they are taking their capital from here and putting it in other places. The other thing that's adding to these spikes is if you own a put, you close the put, the option market maker now has to go out in the market and delta neutral themselves, which means they have to buy stock in the open market. That's adding to the acceleration of this. So this is one indicator. I want to give you 2 more, but you need to watch this because this is pretty glaring, and it leads me to believe that we could see more selling pressure going forward. Now, you can see this with AMC as well, but much more muted than you're going to see with GME, which has really been the leading one. Now, if you do see this pop up, just watch this level. It's really been like 21, but you closed right on it. If you got over 22.35 tomorrow, could you push again? Yes. If you're looking to do a trade like that, it is there if you do push over that. Today's volume was absolutely insane. And frankly, this held up a lot better than GME during the sell down. But we're looking at it from a macro standpoint right now. As far as other trades, we threw this one out there yesterday, and it's given you another setup today. So if you just look straight across, and that's why it's so important to use candlesticks, you can look at this close. Look at the close and you can see this. You can see the wicks. You can see all the rejection in here. This is the highest close in 3 years. If you look at the weekly, this is what we talked about, that boomerang, right? And here's that massive hammer. And now you've overshot, and now you're at this level that you haven't been to since 2019. And what you do now is you just kind of start walking your way up, right? These levels. That's what happens next. And that's what you have to start looking for. So 1848, 2345. So they're the levels to start watching. But you need to understand what's going on under the hood of the market. And I think that's most important than anything. So for me, understanding, and this is the second indicator that you need to look at, focus on what's going on. So what is going on? Well, we are rejecting the 200-day. We are rejecting the 50. This is what I mean. You have no leadership anymore. Your leadership went away. So what are you going to do when your leadership goes away? Well, you're going to go look for new leaders. You couldn't find those today. Okay, GameStop and AMC are not going to lead the markets high, right? They're just not. So here you are, and you closed at a low. This is not something you want to be rushing into, and you certainly don't want to be rushing into the indexes when this is going on, right? This is very clean. Not only do you have that break, but if you take a look at it technically, here's your rising wedge, and then you broke your rising wedge with a frozen rope pattern, which leads you to believe that you could come back down to here. Now, whether or not we do that, that remains to be seen, but it is a possibility. And if you look at the leaders, they're rolling. They're still above the 50. I'm not suggesting you're going to blow through all this, but what I'm saying is that if you were looking at this position and wondering what to do with it, well, it closed at the low of the day. If I break that low, then I have the opportunity to go down to 244. That does exist. So it's something to keep in mind. I would say to focus on what's really moving. What's really moving is energy, metals. Those kinds of names seem to be doing exceptionally well. Fertilizer names, focus on that right now. I'm trying to give more of a macro opinion right now on what's going on because this is at a really crucial spot. I mean, some of these names like this may work. And this is one that we added a position today or started a position today, but I think there's a lot more room left in this. Now, if you take a look going straight across at this 17 and a quarter, we fought with it forever, finally flipped it, flipped the 21, which you've been unable to do, right? You can see how this has been support and resistance and how it flipped. Here it was support, flipped to resistance, was resistance for 2 weeks, flipped again. And now that you've broken this wedge line, for those that don't know, this is Black Rifle Coffee. They have a pretty large following, actually. And you can see where your next levels are going to be, right? So now you're going to have to just watch this 1880 and work your way up. But realistically, when you start breaking these levels and breaking out of these wedge lines, clearing this 1880 would set you up for a retest of this 22 3/4. Now, the third thing that you need to focus on is what's going on with the 10-year Treasury. Why is this important? It's important because it tells you what's going on as far as inflows and outflows from equity to bond market. When you're selling like this, okay, and the yield is going higher, people are selling bonds when the yield goes higher. When we inverse and the yield starts dropping like today, and we make a lower low, institutions are buying bonds. So if they're buying bonds, they must be selling something. What are they selling? They're selling equities. So this is really important to grasp. Now, based upon this, based upon what you're seeing in the SOX, based upon what you're seeing in the Qs, based upon what's happened in GME for the past 3 times, I think you should have your antenna up. I think we're seeing some red flags. I'm not saying you're going to correct again, but I'm saying that the move that we just have, the next move might be muted. If we just focus on the fact that it might be muted, instead of saying that we're in a position where it's going to go down substantially, then we can just build a plan around that and then trade what happens, trade what's in front of us, right? So that's what I would focus on. And 2 things I'm going to leave you with. 1, SARK, the short ETF for ARRK. ARKK. You're going to see this doji right here. If you flip this doji, okay, 47.85, you're probably going to blow up to these levels pretty quickly, all right? And you're seeing the same thing in this trade. Very similar. They're not going to play games this time. They're going to jump in. This is setting up a perfect bullish hook reversal, all right? Finally, I'm going to leave you with this because this is pertinent. See this wedge line? You're sitting right there. You basically have a bullish engulfing at the bottom of a channel, forming a bullish hook reversal on the VIX. So this is telling you that we could be setting up for more selling. So that's it. You might want to go watch that GME part again and just make sure that you really understand what I was trying to explain there. Hopefully you got it. And let's go from there. Everyone, trade to win tomorrow.